Now, the government is drawing up plans which could result in the renationalisation of the UK, of the country's largest water supplier. It's teetering on the brink of collapse. So joining us now is Liam Halligan.
It's Thames Water, Liam. What a mess.
It is a mess. Let's just rewind a little bit and think back to where we started with this company. I've got a little graphic here. Seeing as it's you. Nice green dress, by the way.
Thanks.
So it was back in 1989 that Thames Water was privatised during those Thatcher-era privatisations. And this is the biggest water company in Britain. It's not just big chunks of London. It goes right across to parts of Gloucestershire to the west, all the way down to Kent in the east. It covers more than 1 in 4 of the British population, 27% of all households. Now, interestingly, since it's been privatised, its shares have been bought up by various strategic investors, including governments. So the government of the United Arab Emirates, the Abu Dhabi Investment Authority, owns part of Thames Water, as does the Chinese government.
Because they presumably assume it's going to be a profitable venture and they're going to get a good return.
That's right. But the problem it has a £14 billion debt pile that it's amassed over many years. Now, the problem is, when interest rates go up, the cost of servicing your debt goes up. And when inflation goes up, when a lot of the debt is linked to inflation, which it is, about half this debt pile is linked to inflation, again, the debt service goes up. And the problem is, it isn't that Thames Water hasn't got assets. It isn't that it hasn't got a big revenue stream. It has, because we're all paying our bills. Those bills are going up. They just went up last month.
Profits.
The problem they've got is a cash crunch. With all these debt service costs going up, they haven't got the operating capital to keep going. And they say they need an immediate cash injection of at least £1 billion. Now, this gives the government a dilemma. Some people say, the government should immediately renationalise Thames Water, make some kind of big ideological statement. We're taking it back in-house. But actually, under the terms of that 1989 Act of Privatisation, the government can put this company in special measures, and it can compel the owners of the company, the shareholders of the company, to pay money to service the debt and even swap the debt that they owe for equity. That means they make them own more of the company in order to pay off some of the debt.
I mean, that sounds quite complicated.
And it will be complicated, and there'll be lots and lots of lawyers involved, a lawyer's bonanza, and it could take a long time. That's why we're at a crunch point. So many of these big financial issues have decided, lock yourselves in a room because, the barbarians at the gate, the wolves are coming. The debt is owned by investors in the market. The value of that debt is now plunging. People are assuming they're not going to get the money back. So that makes all the sums much, much more difficult.
Some of the big shareholders, of course, have been paid billions of pounds.
So there was a previous shareholder, and they're not accused of any wrongdoing whatsoever, but we're talking about the Australian investment bank, Macquarie. They took out, over the decade or so that they owned a big chunk of Thames Water, they took about £1.6 billion in dividends. So that's £1,600 million in dividends.
We don't know between how many people that was shared.
We don't know between how many people, but it would have been pension funds. It's not just the executives. Of course, the executives will have had a lot of the action that have been incentivised, as the phrase has it. A lot of it will have been pension funds, insurance companies, big institutional shareholders. Individuals didn't pay themselves £1.6 billion, but it was a lot of money to take out the company. And there are other things going on in the background. So Thames Water, a lot of its infrastructure will go back to the Victorian era. A lot of it is leaking. You've got all those sewage leaks that we've been hearing
630 million litres a year.
Absolutely. Plus, these companies are under enormous pressure to do lots of sort of environmental and net zero stuff, which costs money up front. What's it going to mean for our bills? Well, none of this is going to help keep the bills low. All of this, almost everything I've said, is going to need more funding, either by shareholders and or the government and or almost certainly households paying their water bills.
No, it should be by the shareholders.
It should be by the shareholders, but it's going to be very difficult to force them to do that in the time frame that we need to do it.
How long
to make sure? Well, it depends on how complicated the loan covenants are. It depends how complicated the original legislation is. It's going to take a while. We're going to be talking about this for some time. So it's a story about our rising water bills, but also a big ideological battle in the Conservative Party and beyond.